Let's go to Nvidia first. It was down about 3.5% earlier. Now it's only down 1%. But there is some commentary out there this morning.
Yeah, and I would say Nvidia's had a rough couple of sessions now as we've seen it pull back about 15% from its all-time high, which isn't too shabby, but it's definitely something that's concerned, I think, a lot of the overall bullish thesis on the market, because obviously Nvidia has so much momentum. But Morgan Stanley raising its price target to $144 a share from $116 with an overweight rating following positive data from trips, they said, to Taiwan as well as China. And as a result, the firm is raising their calendar 2025 estimates and thanks data points from two of those trips, and U.S. checks now still remain robust. However, they did add that it's clear that we are at the tail end of the hopper cycle, and the frothiness and visibility is lower than it was. And given the enthusiasm they are hearing for Blackwell now is lower than it would have been. So, I mean, all in all, Street still very much loves this name. There's 58 analysts. There's 53 buys, 5 holds, no underperforms, no sells. I would respect an underperform at this point just to see some divergence from the trend, but analysts love this name, and there's a reason why. I mean, it's the second best performer in the S&P 500 this year so far, just behind Supermicro. But like in terms of the ads, I mean, like the value add we see on like a daily basis when Nvidia moves, it can add like literally hundreds of billions of dollars in market cap in a single session. We've seen that before.
Yeah, I mean, it's keeping the Nasdaq afloat right now as it repaired itself from down move. Well, I shouldn't frame it that way because it's still down, but it was down a good bit earlier, and now that it's come back, things have stabilized a bit.
The classic intraday recovery from Nvidia.
Let's talk to Dan Ives about why you still see and are as bullish as you have been for a while. Look, it speaks to argue that even though this has been led by the godfather of AI, I think we had tech stocks up another 15% going into the year, Nasdaq 20,000, he argues. Jensen's Nvidia, the multiplier for every dollar spent on Nvidia chip $8 to $10 going through the rest of tech software infrastructure semi, and I think now consumer AI revolution with what's happening in Apple. In my opinion, it is 9 o'clock p.m. in the AI party that goes until 4 o'clock a.m. And I believe that the current tech market bull market will last. And Dan Ives responds, though I think there's a 2 in our opinion, it's a 2-year tech boom market because I think the next phase is second, third, fourth derivatives. When asked how long it takes to get to 4 o'clock a.m. naturally, you can observe what's happening with Microsoft Hyper-Scaros when you consider the application scenarios. If someone had told you 6 months ago that Dell was an AI brand, they would have said there was no wet look at it today. But I believe this is what is happening at Oracle. Google Amazon is next, but after that it will be brands like Palantir. Not 1999, but 1995 is the year in question. I believe the figures will increase dramatically in the upcoming season, which confirms our prediction that the bears will keep screaming in their caves about spreadsheet valuation. This tech market is still rising. Moore maintained his overweight or buy recommendation on Nvidia stock and increased his price target from $116 to $144 per share. This is a significant 16% increase from the current $124 price tag of Nvidia stock. What's even amazing is that this price target surpasses the all-time high of $140.76 that Nvidia achieved on June 20th. Joseph Moore added, "At these levels, Morgan Stanley analysts aren't pounding the table." Considering the recent sharp increase in the price of Nvidia shares, Moore is not necessarily advocating investing in the company right now, but he still feels that Nvidia is unquestionably the market leader in AI semiconductors, and that as it moves toward new products and new technologies, its position will significantly improve. Despite the company's incredible market capitalization since its last earnings report in May, this remains the most compelling narrative in the AI semiconductor space, and as we transition, Blackwell visibility and backlog will much improve between 8100 and 8200. We're going to find out if Nvidia stock is a great buy, but first, if you made it this far into the video, thank you. These videos take a lot of time and effort to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This greatly aids in our development. Moore continues to believe that the best is yet to come and that Nvidia is about to reach some new unparalleled heights. According to Bob O'Donnell of Technalysis Research, this is more of a psychological response to how quickly this business expanded. This company, which most people had never heard of until a few months ago, has the largest capitalization in the world. It's still not quite there, but the point is that it's in the top 3 and could overtake the top spot once again. This kind of rise indicates that many people made a lot of money very quickly, and I believe that many people are reacting to that by deciding to take some profits while they can. Sure, the company will probably grow, but it doesn't hurt to take some of that money. I firmly believe that this is the case because the core narrative of what Nvidia is doing, the core narrative surrounding artificial intelligence, and the rationale behind investing in that technology have not changed. As that report recently stated, even if they generate a mere $250 billion in cash, that is still an astonishing sum of money given that orders are sold out for the upcoming year and that many of their suppliers are sold out for the same period of time. There is a great deal of excitement surrounding that. Additionally, Jensen has built not just one, but potentially 2 distinct software platforms, the CUDA software platform, which developers are utilizing. And now that he has this enterprise AI software, which businesses are beginning to use, he recently signed deals with HP, Dell, Lenovo, Cisco, and all these major enterprise hardware companies. As a result, many large businesses worldwide, not just in the tech sector, are investing in general artificial intelligence, Gen AI. But they also want to handle some of that work themselves, and they will use the Nvidia software going forward, creating yet another revenue stream as Nvidia begins to collect licenses for that software. There's no denying that artificial intelligence is currently the most significant technology and every business is trying to use artificial intelligence in some capacity, whether it be through internal operations or their services. Since Nvidia is the company that produces the chips that enable this, it is highly likely that the business will continue to grow in terms of revenue and market capitalization. Due to the spike in demand for its GPUs, Nvidia's operating income and quarterly revenue have surged by 149% and 93%, respectively, over the last 4 reported quarters. Free cash flow has grown by 147% in the interim. In light of this, Nvidia remains a highly worthwhile investment even with its enormous success to date. Considering that AI technology still has a great deal of room for advancement, it still hasn't reached its full potential. What are your thoughts on Nvidia's stock? Is it worth buying at the moment? Please share your opinions with us in the comments below. And don't forget to share your NVDA valuation with us. Recently, Nvidia's stock increased somewhat as a result of a price increase by Morgan Stanley analysts. Target on the chipmaker's stock because sales data indicates a strong and previously unheard of demand for its current data center processors. Analysts predict that Nvidia's stock will break new records in the near future and that it will have a significant chance of regaining its position as the most valuable company in the world. In this video, we will address 3 key inquiries. What precisely did the Morgan Stanley analysts say, and why is the price now bullish? Don't miss out on Target and what's coming up for Nvidia stock investors. But first, you can subscribe to our channel Investing Tutorial if you want to stay up to date on the most recent news and updates about the stock market, as well as the latest updates from Nvidia. We post updates about the biggest shifts and market catalysts, so click the bell icon if you don't want to miss them. All right, back to today's video. Software is suffering a little bit. Chips are quite widely owned. The list of companies that you can find in the Jolt includes Qualcomm, NXP, and others. It's crucial to realize how important the semiconductor trade is to the U.S. economy. Chips are the new oil that drives the tape. Examining the S&P performance as of right now, you'll notice a slight recovery in price. This is related to the fact that Nvidia dropped below 119 early this morning. And as the day goes on, we're witnessing a gradual return of buying interest in Nvidia. As Nvidia continues to rise, the semiconductor business is where it all starts for me when attempting to predict market trends. Sanad was essentially flat this morning and isn't moving too much at the moment. The business would earn $3.34 per share on a GAAP basis and $3.53 per share on an adjusted basis, according to Morgan Stanley analyst Joseph Moore, who recently raised his earnings projections for NVIDIA. These estimates are much higher than NVIDIA's previous estimates of $2.91 per share and $3.10 per share. This conclusion was reached after analysts' channel inspections in Taiwan and China revealed an unparalleled demand for Nvidia's Hopper series devices, which was growing at an unprecedented rate. Moore, however, has expressed some concerns about Nvidia's move to the next-generation Blackwell series. He noted that given the enthusiasm we are hearing for Blackwell, the analyst believes that Nvidia faces a higher bar nowadays, especially given the sharp increase in the company's market cap since its last earnings report in May. Moore also added that, while their contacts report that the exceptional complexity of Blackwell chips and racks can be a challenging ramp, Nvidia's supply ramp appears to be going well. Nevertheless, Moore continued, expressing his continued admiration for Nvidia's Hopper products, particularly the H200 and H100 GPUs. This strong demand for Nvidia's products is not surprising, as these GPUs are widely used in generative AI and high-performance computing, particularly in data centers. Moore also anticipates that Nvidia's GPU sales will continue to grow in China and Taiwan for an extended period of time, without any decline.
Joining us now, the analyst behind that call, Joseph Moore from Morgan Stanley. Good to have you on. Why is now the moment to double down on Nvidia?
Well, I think they're in a strong position. You know, we continue to see very robust spending in AI. And I think the debate in the last 2 or 3 months has been, will we see a pause in front of this next generation product, this product called Blackwell, that starts ramping towards the tail end of this year. And our conviction is growing that we just won't see that pause. We were just in Taiwan and China and did a series of checks where we looked into particularly some of the Chinese products that's rolling out, the H20. We expect that to be quite strong. But essentially, we see a strong business trend going into the Blackwell launch, and then we see very robust demand on Blackwell that should persist through most of 2025.
How did you go from 116 to 144 on your price target? How much momentum and guesswork on the actual price target is there when it's so richly valued versus fundamental bottom-up analysis?
Yeah, I mean, we've had this incredible move in the stock the last year and a half, and yet the multiple is in the same range where it has been. You know, most of this has been earnings growth. So we sort of see, we use numbers that include stock compensation. We're using a low 40s multiple. That's kind of the high end of the range that we've seen over the last 3 or 4 years for NVIDIA on a forward basis. And I think given the fact that we're at this point where visibility is actually probably the lowest it's going to be in the next 12 months with new products starting to ramp that are going to give us more visibility, my sense is that's pretty reasonable. You know, so as incredible as this move in the stock has been, it's really been justified by the move in earnings so far. And I think the key question going forward is how sustainable is that move in earnings?
I want to go back to the comments you made about the H20 builds from the Taiwan side, the H20 demand from the China side. I mean, we've seen NVIDIA de-risking its China book of business, in part because the tensions and the trade dynamics between the U.S. and China continue to grow. And that seems to be a dynamic that's happening no matter who wins the election this fall, although I guess devil's in the details. But how meaningful is China and the demand from China to NVIDIA these days when you have global sovereigns and you have enterprise companies taking up so much of the attention?
Yeah, well, as you say, they really have not been shipping to China under the export controls. And when we look at H20, this is a product that is significantly below the performance of their mainstream product, the H100. And so there's been some question in our mind how strong that demand would be, because it is a very competitive segment. And we talked to several customers in China, did hear that there's very robust demand and that people are getting good returns from that. So I don't think it's going to be a big multi-year growth driver unless the export controls clear up. However, I think for the next 2 or 3 quarters in particular, I think this really helps us to bridge the gap until Blackwell starts to ramp. So it is quite strong, and it is across multiple Chinese customers who would certainly prefer to buy Hopper or next generation Blackwell, but can't, and the H20 appears to be a very strong alternative for them.